Welcome to The Explainer. Today, we're diving into the world of crypto, and we're going to do it fast. The goal here is to give you a quick investor's guide, whether you're all in or still on the fence.
All right, so let's just jump right in with a big one. Is crypto just Bitcoin? For the longest time, that's what everyone thought. But things have changed a lot.
Well, to answer that, just look at this number, $1 trillion. That's the rough size of the entire crypto market, even after a massive crash in mid-2022. To put that in perspective, that's almost half the value of all the US dollar bills and coins floating around out there. Huge!
And here's where it gets really interesting. You can see how Bitcoin's dominance is just faded. Look at this. Back in 2017, it was basically the whole game, almost 90% of all trading. Fast forward to 2022, and it's down to about 31%. So who took its place? Well, the big story is smart contracts. They've exploded to nearly 60% of the volume. So yeah, the idea that crypto equals Bitcoin, that's ancient history now.
Okay, so if it's not all Bitcoin, then what is all this stuff? Let's take a look at the crypto family tree, so to speak. We'll break down the main types of digital assets that make up this universe.
This table gives you a great field guide. You've got your basics, the transactional coins like Bitcoin. Their whole purpose is just to be peer-to-peer electronic cash. Then you've got the really big category, smart contracts, with Ethereum being the poster child. Think of these as a kind of operating system for building apps on the blockchain. And that one category alone powers so much else. Decentralized exchanges like Uniswap, lending and borrowing platforms like Aave, and even Web3 and metaverse stuff like Decentraland. Oh, and of course, you've got the meme coins, like Dogecoin. They're kind of in a class of their own.
All right, now we get to the $1 million, or maybe $1 trillion question. What is any of this stuff actually worth? This is the real challenge, right? It's not like a stock where you have earnings or cash flow to look at.
One of the most popular arguments you'll hear, especially for Bitcoin, is that it's the new digital gold. The idea is that it's a rare, safe place to store value, kind of outside the regular financial system.
And, on the surface, they do have some things in common. They're both seen as rare, they're durable, but here is the key difference, and it is a big one. Gold supply is limited by, physics. There's only so much of it in the ground. Bitcoin's supply limit of 21 million coins, that's based on software code, and code can be changed. It would be really, really hard to do, but it's not impossible. That's a huge distinction you have to understand.
And it's not like people haven't tried other ways to value this stuff. There are models based on the size of the network, Metcalfe's law, but they don't really hold up consistently. People have tried linking the price to the cost of mining, but that relationship is all over the place. There's even a popular model called stock to flow that, kind of breaks because it basically predicts the price will go to infinity. So the bottom line, we don't have a reliable valuation model. Not yet anyway.
Okay, let's talk about the one thing everyone knows about crypto, the wild, wild price swings, the volatility.
And believe me, that reputation is well earned. Just look at these drawdowns. We're talking about the drop from the peak price to the bottom. Bitcoin has crashed more than 60%, 6 times, with its worst being an 83% wipeout. And Ether? Even crazier, with a 94% drop at one point. This is absolutely not for the faint of heart.
But here's a really interesting point. People love to call it a bubble, like the Dutch tulip mania back in the day. But those bubbles popped and never came back. With crypto, at least so far, every single one of these massive crashes has been followed by a recovery to new highs. So the argument goes, maybe this isn't a bubble, it's just extreme, insane volatility.
So when you have this kind of chaos, how do traders try to make sense of it? A lot of them turn to chart patterns, looking for clues about where the price might go next. And really, these patterns fall into 2 buckets. Reversal patterns, which signal a trend might be about to flip, and continuation patterns, which suggest the trend is just going to keep on trucking. So a classic example of a bullish reversal, meaning a sign things might go up, is the double bottom. It's pretty much what it sounds like. The price drops, hits a low point, bounces, drops again to that same low point, and then bounces back up for good. It's like it tried to break lower twice and failed. For traders, that can be a signal that the sellers are finally worn out.
And on the flip side, you have its evil twin, the double top. Same idea, but in reverse. The price rallies up to a high, pulls back, rallies again to that same high, and fails to go any further. It's like it hit a ceiling it just can't break. That can be a big warning sign that a rally is losing its momentum.
Okay, so we've been through a lot. Pretty quickly, what does this all mean for you as a potential investor? What are the key takeaways?
One of the biggest arguments for adding crypto to your portfolio is diversification. The hope is that when your stocks go down, crypto might go up, or at least do its own thing. But it's not quite that simple.
And this chart just lays the problem bare. When markets are calm and everything's fine, yeah, crypto doesn't really move with the stock market. The correlation is basically zero. But look what happens when things get scary. When the stock market has a major sell-off, suddenly that correlation skyrockets to over 0.7. In other words, right when you need it to be a diversifier, it stops being one. It just becomes another risky asset that sells off with everything else.
So let's wrap this up with 5 key facts. First, this space is way, way bigger than just Bitcoin. Second, the volatility is absolutely off the charts, but there are strategies to try and manage that risk. Third, that diversification benefit you hear about, it's fragile. It can disappear when you need it most. Fourth, custody is everything. If you lose your private key, your money is gone. Poof, forever. And finally, the big unknown, regulation. Nobody knows what's coming, and that's a huge risk.
And all of this brings us to the final trillion-dollar question. Is crypto a temporary bubble, a massive speculative mania that's going to pop? Or is it a permanent part of our financial world, a revolutionary new technology that we're just seeing in its messy, chaotic beginnings? Honestly, only time is going to tell.